All right, we are live. Welcome back to this week's live stream. Today I'll be covering how the indexes are handling this most recent bear market rally. We got a couple big earnings with Google, Spotify, Microsoft, Enphase, and Visa after the close today. A couple other earnings to talk about towards the end of the week as well. I'll also kind of just walk through really quick the stocks that I'm holding. I'm about 50% invested, maybe a little bit less at this point. Going into the second half of this week. So we'll go through each of the stocks that I'm holding and kind of why I bought them, where I bought them, where's my risk management, and then just go through potential leaders in the market, and finally some watch list actionable stocks for the second half of the week, both on the long side and on the short side. So I think we are good here. If you guys can let me know if the volume's coming in great. Stacy, I can see your comments, so that's good on my end. All right, so before we get started, this stream is sponsored by MarketSmith, which is the trading research platform that we're going to be using, the one that you guys can see on your screen right now, to break down each of the stocks, each of the indexes, ETFs, all that good stuff. If you want to give MarketSmith a try, you can use the link in the description below of this video. Give it a try. I think they have $20 for 3 weeks right there. So I use MarketSmith every single day. It's a great part of my process, and I wouldn't be suggesting others use it if I didn't use it myself. So first off, we'll take a look at QQQs, and yeah, we'll just leave it like this. So last Thursday, we had this big reversal. We talked about it, very similar to the action on February 24th when Russia invaded. The market was right at the lows. We gapped down 3%. All the bad news got priced in, and everyone was short in the market. So of course, the market does what market does best, and it reverses, hurts the most amount of people, and we have this little rally up to the 200-day moving average. Very similar action. Market was already at its lows. Hot CPI numbers come out, so higher than expected inflation. We gapped down 3%. We reversed because everyone was short at this point, and we closed the day up about 2%. But very similar to back in February, there was not many quality setups, so it made most sense for the market to kind of chop sideways and allow the strongest stocks to run the furthest when the market pressure was relieving, and then also hold the strongest as the market sold off and chop sideways. And that's exactly what we saw. We saw some quality breakouts. We had the follow-through day on Friday. Decent action on Monday, and then today really felt like the follow-through day because we saw some stocks breaking out of consolidation periods. For the most part, it still felt like the kind of garbage stocks, the stocks from 2020 coming off the bottoms that were making the strongest moves. So as a swing trader and focusing on kind of CanSlim and growth stocks, there wasn't much to do to get involved in the market today and to benefit from the giant bounces from the oversold areas, but it was still a solid step. This is a live stream, so I can see your comments in the comment section. If you guys have any chart requests, drop them in the comments and we'll get to them later on in the live stream. So where are we at right now? QQQs made a great move today, closed right at the high of the day. It did so on lower volume, and unfortunately, as you can see up here, in after hours we are down 2.1%. That is because Google did not hit their earnings expectations. Earnings were down 15% year over year. Sales up only 6%. After-tax profit margins did improve, but obviously the market is not responding well to this because Google is down 6.6% after hours, bringing this to 97.57, and that means we are basically right near the lows on Google again, back under the 21 and 8-day EMAs, kind of rolling over after just touching this 50-day moving average. So one thing that Mark Minervini talks about is the leaders of the previous bear or bull markets are not likely to lead in the next bull market. And we are starting to see the old leaders really get washed out and have a hard time finding their footing here. And just because they've already made these thousands of percent moves off their lows, off their IPOs, the chances of them making you life-changing money at this point is less likely than a new group of leaders. So instead of always focusing on the biggest stocks in the market, Google, Meta, Amazon, Tesla, those kind of stocks. Now Tesla could maybe still lead, we'll see here. We'll take a look at that chart in a bit. But they're really not the stocks that you want to be focusing on for really high growth potential. They've had great runs, but at this point, they're not the stock showing the best relative strength. Also, after hours, we had Microsoft. I think they did beat expectations. Earnings was up 4%, not very strong. This one's also down 6.6%. It really doesn't matter what the numbers are or what expectations versus reality is on the earnings report. It's really how the market responds to the earnings report. If they respond favorably, and we see right now, a lot of money is still on the sidelines. So we were hoping for quality earnings reports from these big dogs, big tech, and then institutional like investors, the big hedge funds start to pour back into the market. But we're not seeing that after hours. We're down 6.6% on Microsoft. What was another one? Spotify took a pretty big hit, down 6.7% after hours, back right near the lows. Actually, right back at the 8 and 21 EMAs. We'll see if that holds. Couple good stocks from earnings. Enphase. Now, this is up 3.4% after hours, after already being up about 5% today. And this is fighting the entire market, the NASDAQ being down 2% after hours. So this is a good sign for what we all thought was going to be the leader of the next bull cycle, as we had the previous earnings breakout where earnings were up 102%, sales up 68%, after-tax profit margins up 28% right here. We come back with another stronger quarter, earnings per share up 108%, sales up 81%, after-tax profit margins improved 27%. So this is really fundamentally doing everything a stock could in this market to kind of get your attention. But it's not going to matter if the overall market is continuing to press down. We want to be focusing on the stocks showing relative strength and keeping a close eye on them, but only starting positions in them as the general market finds its footing. Otherwise, like William O'Neill says, 75% of stocks move in the general direction of the market. So all we're doing is playing a game of probability and risk management. And even if the stock is stellar on earnings, if the market's falling apart, it only has a 25% chance of fighting against that trend. Not to say that it's not going to be the stock that we want to focus on. I'm just saying we might need to give it a couple of days, couple of weeks to tighten up while the market finds its footing again. Visa also reported after hours, only up 1.3%, but again, indexes down about 2%. The fact that it's up at all is a good sign, but it is coming right into this previous area of previous support, now resistance, because we've closed underneath. Back to the last ETFs. So SPY, that's been kind of the stronger of the two, at least compared to their moving averages. SPY was up 1.5%, closed just under the 50-day moving average today, and is now down 0.9%. SPY has been a little bit stronger because it's not as tech heavy. Tech stocks continue to be the ones that are pulling down the market. Those previous leaders, not the leaders right now. IWO, this is a growth ETF. So as a growth swing trader, typically, this will give me a better sense of how my strategy and how the stocks that I look for would be performing in the market. So when IWO is in a nice strong uptrend, riding that 8-day EMA higher, I know as a swing trader, this is the time where I need to focus and really kind of put the pedal to the metal and make some easy money here. Because when price gets into that nice uptrend, clean uptrend, that's when you're going to have breakout stocks after breakout stocks, and you're going to be like, who said it today on Twitter? Someone's like, oh, does everyone feel like their stock selection got better overnight? And I was like, yeah, I'm a genius again because the market environment's better. And that's kind of like twofold. Like, you need to understand that a lot of the times there's a lot of randomness in your stock trading results. Now, we can't really control what a stock does after we buy it, right? So that's why we want to buy it as the market's uptrending, as market pressure is lifting and market breadth improves, the number of stocks and areas of the stock market that start to rally improves, because then we add probability to our side, trading on the long side. Right now, this had a great day, up 3.1%. So a lot of those growth stocks off the bottoms had a great day. Ran into the 50-day moving average, down 1.1% after hours. So we'll see how that holds. And then RK, this is like the perfect ETF to see, is this just the crappy growth stocks coming off the bottom? And you see it was up 6.6% today, closing back over the 8 and 21 EMAs, but after hours down 3%. So at this point, we're kind of in no man's land. We're going to get a ton of feedback over these next 2 days, whether this market is ready for an actual sustained rally up to the 200-day like we saw in July to August and when was this? March to April, first part of April, last part of March, whatever. Right now, I'm still not seeing the groups setting up outside of biotech and oil and gas stocks, a little bit of coal, but we're still kind of at this point in the market where we are bouncing because everyone's short, but there's still not a bunch of high quality setups and setups in different groups. So one thing that Ross Haber at TraderLion always talks about is for a sustained uptrend, you really need like 3 or more groups of your traditional growth stock groups setting up and showing relative strength for a sustained uptrend to occur in the market. And we're just not seeing that yet. So although this is positive action, obviously moving up is better than moving further down. It seems like what we're seeing in the market with the pullback tomorrow would be more beneficial because we don't have the setups, right? So the more we chop around side to side like we did last week, the more time the best setups and the best stocks have to prove themselves, and the worst stocks and the worst setups have to prove themselves on the downside. So sideways action, as long as you're patient, is better for both the long and short setups setting up in the market. And you can play both sides, buy the strongest stocks, short the weakest stocks, whatever you'd like to do. So we have a couple big earnings tomorrow. Let me bring this up, actually. Okay, so tomorrow after the close, or I guess before the open, we have Waste Management and Boeing. Those are the big two. And then after the market closes, we have another big tech in Meta, Ford, Teladoc, EQT, which is an oil and gas stock. And then Thursday morning, Shopify. That's going to be a little bit big. Shopify is still kind of basing out. Doesn't give me any reason to buy or short it at this point. It's too strong to short, too weak to buy. A lot of overhead supply there. McDonald's is before market open on Thursday. MasterCard, Southwest. After the close on Thursday, that's another big one for tech. We have Apple, Amazon, Intel, and then smaller stuff like Pinterest, T-Mobile, United States Steel, like that. So we're going to get a lot of information this week. And as long as you guys are being like patient and you're dipping your toe in the water in some high quality setups and then going from there, like only putting on more exposure as you gain traction in the market, you're going to be safe. If you're seeing the market was up on Friday, so you go 100% into the market or even leveraged into the market on Monday, and we get a good day today, now you're 100% leveraged and the market's going to be down to start the day tomorrow, most likely. So instead of playing this volatile action in this pretty drastic earnings week, I like to size down and only kind of hold positions if they're profitable at the close. If I don't have a profit on a stock that I'm trading, when it closes, I'll usually either cut half or cut the entire position because we're still in a bear market. You guys have to remember that. Still in a bear market. So instead of trying to make a bunch of money, this is more about like dipping your toe in and getting some feedback from the market. All right, so I said earlier that we'd walk through the stocks that I own. So really quickly, we'll go through them. CEG, Energy Alternative Other Group. I put this on the breakout watch list video that I posted on Saturday on my channel. I bought this on actually yesterday as it was pulling back into the 8-day EMA. All the market, like the entire market was kind of pulling back and this was doing the same. So I felt like I could get a lower risk entry point by doing so. And it's up about 1%, nothing crazy, and only about a 10% position size for this one. CF, this is one that I'm really interested in, and it's going to be on the watch list, so we'll just kind of talk about it right now. So I started a position today at 2 different spots. This was a stock in a relatively like weaker group, but this is a fertilizer stock in those like IPI, which has been beaten down but is kind of basing, MOS, which is beaten down but basing. This is the strongest of those three, and because those other two are basing and starting to curl up, I want to look at the strongest stock in that group. So this is one who had kind of bounced around under the 50-day moving average, pulled back yesterday, which was like ideal for the setup, and then drilling down into just a 15-minute chart, you could see the bear flag, or what seemed to be a bear flag yesterday, but we immediately took that out today as the market was strong. So I bought some at like 104, it was just under 50, 104.40 something, as it was coming out here, and then I added to it as it broke over 107 as well. So this is one of my more decent sized positions. We'll see how this holds up tomorrow. I have the stop loss under yesterday's low, which is also going to be right at the 50-day moving average or just below it, and slightly above the 21 EMA. CTKB also on the breakout watch list coming into this week. Bought it yesterday as it broke over, or I bought it Monday as it broke over Friday's high. It hasn't done much of anything just yet, so I did cut half of this position just because, and I cut it at break even around 15.30. Just didn't move, and over the last 2 days, NASDAQ was up about 1% on Monday, 2% today. So if it's not moving on that, it's just giving me a signal that like maybe this has one more pullback and even tighter price action before it's ready to take off. So instead of taking a full stop on that position, I just cut half the position for break even, and we'll see how it goes there. DK, this is an energy play. I thought this was an oil and gas stock that was going to kind of take off like the other names that was just coiling up for a little bit longer. This I got stopped out of half my position today as it took out yesterday's low. Another way I just managed risk on the downside is if this closed basically, actually this was actually maybe 0.5% under my entry point when it closed yesterday, so I didn't love that. So the second it took out yesterday's low, I just cut half the position there. Stop losses under the 50-day moving average, we'll see on the rest. Still hold a little bit of ERX. I bought this at 60 on last Wednesday, I believe. This is up about 12%. I've been taking profits on the way up. Stop loss is just above 60. Ideally, as the market pulls back, this will pull back and sit on the previous breakout area, but we would really want to focus, excuse me, when you're doing technical analysis, you don't want to do it on the leveraged ETF, you want to do it on the underlying asset. So instead of ERX doing technical analysis and looking for support and resistance, go to XLE. So ideally, this pulls back into the 83.50 area where we had some previous resistance. Now we've closed above that, so it's potential support. So if we can pull back into this area, allow that 21 EMA to catch up as well, that could be another loading zone for my ERX position, kind of putting back on what I sold into strength. But we'll see. We'll see how it acts. Going through my watch list, and it still looks like oil and gas names are the strongest group to focus on. And then just for some overall exposure, on Monday I picked up some TQQQ, sold half of it into strength today because we did have these big tech earnings. Just looking at the market, it did get a little extended in the short term. And I don't know. Again, not trying to hit any home runs in this market, so I was selling into strength, making sure I had some profits on those moves. So those are the, 6 stocks that I own at this point. Not super heavily invested. Tomorrow, I think, is going to give us a lot of information about the market, so we'll see how it goes from there. All right, going into, really quick, just going through my top 12 potential leaders in the market. AEHR has been acting super well, made another new high today, but did get extended, closed near the low of the day, down a little bit, 3% after hours. This has been a really frustrating stock because it's so strong, but it has never really set up a low risk entry point. So I haven't found a way to weasel into this stock, but just because I didn't trade it doesn't mean I'm not happy that it is moving up, because it does give a little bit more credence to the style that I trade. AZPN, this has earnings on a couple days from now. So now I don't want to trade this going into earnings, but this is a stock that has been making higher highs and higher lows this entire market. It's in computer software enterprises, which you wouldn't think would be making new highs in the market. So something that maybe this is a potential new market leader that we haven't heard about. I haven't heard much about this, but stock making new highs in a market that's just coming off its lows in the tech field, something that we want to keep an eye on. CCRN, just kind of quiet day today, down 2.6%, already very extended. This is the travel nurse stock. Put a new high yesterday, so it deserves a little bit of rest. Celsius, this is very close to being taken off the list. It has extremely strong fundamentals, and kind of the only reason why it's on here, big cup and handle. I've heard this deemed the punch bowl of death because the depth was too deep from 110 to 38, and now we're putting in a really long handle from 120 down to 80, so a 33% pullback on that handle. We'll see. I not looking to get long anything under a 50-day moving average, especially a declining 50-day moving average, but if this can firm up and break to the upside, again, that's just more feedback that the market's giving us that the stocks that we're looking at or should be looking at are acting well, and our trading strategy would probably do better. Newcomer to the list, well, it lost its spot when it broke through the 8, 21, and 50-day moving averages very quickly, regained its spot on this list today. We kicked Wolf out. Really nice move, up 9.8%. And a lot of the stocks that had this look where we were previous market leaders, we flushed under the 8, the 21, the 50-day moving average. We had a first rally attempt up to that. That got pushed back down, but then we put in a higher low from our first steep pullback. And then when the stock broke over the 50-day, it was taking off. So 3 examples of this just today. And this is a setup that I have a hard time buying because I'm thinking, okay, the price is still under the 50-day. The 50-day is flat to declining. If I buy and then the price starts to drop back under the 50-day, we're still in a bear market. Should I be playing it safe? But 3 breakouts today using all the same setup. So I need to go back and really study this kind of sharp decline, bounce to the 50-day, higher low, and then reclaim as the market finds its footing. Just need to look for more examples of that because SWAV, kind of a perfect example, up 6% today. I think this was up maybe 10% or 9% at the peak. I joked around on Twitter that every swing trader was buying this in the morning, so of course we were going to also have a pullback during the day. But similar action, right? We break under the 50-day, first rally is back through it, and then we kind of build underneath. A couple days where we touch it but never close back above it, and then we gap over and there's just shoot above the 50-day and had a nice move on volume. The other one is CPRX, another previous leader, really steep sell-off, 17.22 down to 11. First attempt at the 50-day moving average fails. We pull back, put in a higher low, build under the 50-day, and then pop out yesterday, up 4% yesterday, up another 3.6% today. So this kind of structure is something that I need to study a little bit more because I don't love trading it, but I do see this always breaking out. I think OXY had a setup like this too. Not quite. It failed pretty quick there, but OXY is a stock that we'll talk about later. Going back through Enphase, we talked about they had earnings. We're now sitting at 274, basically right to a previous area of support, now potential resistance and overhead supply. So if the market continues to press down and the people that got in at this price didn't use a stop loss and want to get out for break even, well, here's their chance with the gap up tomorrow into a weak market to do so. So this is where, we're going to get a lot of feedback from the market. If the market gaps down 2%, finds its footing immediately, well then Enphase isn't likely going to sell off at this supply zone. It's probably going to be like, hey, this is a strong stock. The market is finding its footing. This is going to continue higher, and that's going to give us great feedback. Now, if we open minus 2% on the index and we immediately see ENPH sell off into this supply zone, then we know, hey, today's not the day to put on more exposure. Let's just give the market another full day to prove itself. Similar action with FSLR for solar. Maybe this is a good example. So We broke through the 50-day, first attempt up to the 50-day. Maybe we fail, put in a higher low at 120. In a couple weeks, maybe this is going to be those stocks like CPRX and CLFD that make that same pattern, SWAV. A couple others, HLIT, extended in the short term, making new all-time highs. Again, telecom, cable, 15th strongest group in the market. Makes sense that that stock's holding up, but man, a lot of power in a tough market. That's good to see. ON Semiconductors, maybe another kind of similar story. Right at the 50-day, down 4% after hours. We'll see how that goes. RYTM, this is a biotech stock that had a crazy 500% move from $5 all the way up to $30. Been kind of basing around. Went under the 50-day, built under it, popped it today, but I mean, closed over it. We'll see. 15-minute chart, anything? Maybe 2450 area. We'll see. And then SGML, another stock hitting all-time highs today. This is a lithium stock. Just incredible power here. Not many low-risk entry points along the way. So I haven't found a way in this, but I mean, if you guys are in this stock, just drop in the comments how much money you're making, because you guys are killing it if you're in this name. All right, so those are the kind of 12 leadership stocks. I see the comments. We're going to go through. I don't have too many stocks to cover today on the long or short side. I really want to get the feedback from the market tomorrow and then go for the second half of the week. But I'll keep posting charts on Twitter and stock twits all the time. So a couple stocks that I'll be watching for tomorrow. AMPY. This is an oil and gas stock. Maybe we'll just group all the oil and gas stocks together as we do this. So AMPY, really big structure here, but one of those stocks that put in a nice flag right at the 8-day EMA coming into the week or last week. So broke out on the 19th up 5%, came right up to the brim, and then got rejected, pulled back a little bit. So as we get a gap down tomorrow, that's what we need to be functioning as or thinking as. So if we get a gap down tomorrow, does $9 hold? If it doesn't, do we gap down and then quickly reclaim it, the $9 area or the previous low, the 8-day EMA, kind of for like an oops reversal play on AMPY? I would be interested in an oops reversal where we gap down and then we take out the previous day's low, and that's the buy point. I would be more interested in doing that on a stock like AMPY, which is oil and gas related. That oil and gas group has been extremely strong. Tech is the group that has been selling off and down today with Google and Microsoft. So if anything's going to find its footing a little bit quicker, it's not going to be in the tech field. It's going to be in something like oil and gas that has been holding up better. So we'll see potential entry point if we do a gap down, oops reversal. The low today was 908. So we'll take a look at that. Other oil and gas stocks, CTRA. This kind of has the same feel to it as DK that I own, where a lot of oil and gas stocks were breaking out already. So I'm kind of on the fence on this. Like, this is a really nice setup. Price has been tightening. We had an inside candle today, still closed over 30. We're above all the key moving averages. But why is this stock not breaking out when all the other oil and gas stocks are breaking out? So this does give us a low risk entry point, a nice little pivot to work with yesterday's high. What was that? 30.47, call it 30.50. So kind of a trade-off there. Probably not going to be the strongest of the oil and gas names, but we do get a low risk entry point where if it doesn't work for us, it's going to stop us out right away. And you take that trade over and over again, and odds are in your favor in a stronger market. This is live, so if you guys have any trading questions, any chart requests, drop those in the comments, and I'll get to them as soon as I'm done sharing my watch list for the second half of the week. Thanks for the question, Dots. OXY, one of the stronger oil and gas names, held 70 the past 2 days, and just tight price action. Last 3 days basically closed within 0.5% of each other. Volume is drying up here, so tight price action, volume dry up. Typically, we're going to see an expansion in volatility. Now, that can mean an expansion volatility to the upside or to the downside. But again, if you use stop losses and keep your risk very tight, then even if that movement up and down is 50%, 50-50, it's not 50-50, but again, just for the example, then if you take a 3% stop loss, but then take profits at 6% or 9%, something even stronger, then you have asymmetrical risk reward on your side. So it doesn't matter if 50% of the time you're wrong, 50% of the time you're right. If you're wrong, when you're wrong, you're only wrong 3% versus when you're right, you're up 9% on a strong stock and a strong group with volatility in price and volume contracting, then that's a bet that you make. And you bet it knowing that you're not going to be right every single time. So those are the three oil and gas related names, AMPY, CTRA, and OXY that I'll be watching for in the second half of the week. I do still have ERX. So again, if we sell off down to this 83.60 area on XLE, I'll probably look to add to my ERX position as long as it's kind of steadily pulling back and not just a big distribution candle, something big happened in the market. Because I still see the majority of the quality setups in the market are oil and gas. It has extended a little bit, so a little rest time would be fine. We just don't want to see big distribution candles on the major index or on the major ETF for oil and gas or energy. Couple other stocks, CALX, really nice volume move today, highest volume since previous earnings. Broke and closed over $70, closed in the upper 84th percentile of the range, or the top 15 percentile. This is one where we're already going to gap down in the market. I want to see $70 hold in this. If we gap down and 70 holds, and then we start to see the market find its footing, the $70 area is where I would start to build a position and then keep a stop loss slightly under that. Not the easiest setup to trade, but something that if you know how high volume closes HVCs work, then it might be worth the risk. So up 18% today on 240% the average daily volume. Not overwhelming volume, not 1,000% the average volume. Still above average, well above average, and closed high in the range, but most in the market did before the sell-off after hours. So we'll see how $70 holds on this one. We talked about CF. It's stock, again, full disclosure, I already own it, but it's one in that fertilizer group, the strongest of that group, and nice big cup and handle consolidating here above all the key moving averages. Two more on the long side. ISEE, IC. Actually, this took out. So I was hoping this didn't take out the previous highs here. It did, just to kind of tighten the pattern up a little bit. But up 3%. This is a biotech stock. It's not going to act typically in accordance with the indexes, excuse me, or the big tech, which is what's causing the sell-off. So we'll see how this holds. Ideally, like the market for this setup, ideally, the market sells off for the next couple of days. This kind of pulls into the 8-day EMA, and we get some tighter price action. But putting in a new high as the market's just coming off the lows, something that we got to keep an eye on for. And then VRTX. This is another biotech play. Biotech's the fifth strongest group out of 197, and again, doesn't usually trade in accordance with the indexes. This had earnings yesterday, I believe, up 3.5%. Nice closing range yesterday. Today, rallied above that and then closed down a little, 0.4%. Similar to CALX, as we gap down tomorrow, I want to see 300 hold. We have the 8-day EMA right there and a nice round number. If we come into 300 and we see bids coming in, buying support, holding that area, then as the market finds its footing, then we can get a lower risk entry point instead of buying extended up here, buying new highs in a bear market. Not usually the best idea. All right, let me grab a sip of water. If you guys are enjoying this stream, please do me a huge favor. Hit the like button and subscribe to my channel. I go live on Tuesday nights and then do other trading related videos. This is also a shameless plea for likes and subscribers. Today is my birthday, so if you guys would help me out and just hit the like button for my birthday, I would really appreciate that. All right, 3 shorts I have, and then we'll go through all the comments. You guys have a bunch of comments in here, and we definitely want to go through those and have plenty of time to do so. So first one, Snapchat. Snapchat was down, 28% after earnings. Terrible earnings, down 53%. Sales only up 6%. Big move down to the downside, right? And then shorts taking some profits on the way down. Big 28% move. They would be foolish not to take some profits. And then we have a big move yesterday, up 7%. Bigger move today, up 15%. And this is acting very, very similar to how Teladoc acted after we had this big gap down 40% on earnings. And they still had positive earnings at this point, but gap down 40%. And then we had 0.5% move, then a 10%, 3%, 3% move before -9, -6, -8, -3, -3, until it found some more buying support. So I'm using Teladoc as an example to how I want to respond to Snapchat. Now, we know Teladoc had a big run, a couple, 3 days rally until the market pressure came back in and all the shorts already covered, that was running up the price. So then as the market pressure came back in, there's a reason Teladoc dropped so much in the beginning. So it resumed its downtrend after that short covering. So same game plan with Snapchat. +7 yesterday, +15% today after a 20% decline. We're right back into the 8 and 21 EMAs. And now what happens? Bad news in the market. Market pressure starts pushing back down again. There's a reason Snapchat was down 28%. So exactly what we want to look for in a short setup. A big move down. We want to short the weakest stocks in the market, just like we want to buy the strongest stocks. Always trade with the trend. But we do get a little relief back up to key moving averages, and then market pressure starts to come back in. Ideally, yeah, there's not like a super clean point, maybe breaking under 950 as a potential entry point there. We'll see where we open up tomorrow and how the market handles the first 30 minutes there. Why would I want to short a stock that's already down? Just exactly the reason why I would want to buy a stock that's already up. We want to trade with probability, right? We don't have any absolutes in the market. We can't say for certain this stock's going to do X, Y, Z. This stock's going to go up. This stock's going to go down to this price. All we're doing is trading with probability and risk management. And we know stocks that sell off are selling off for a reason. Stocks that sell off on heavy volume, that's institutions liquidating their positions. It takes them a long, long time to liquidate their positions fully. And just the reverse is true. When stocks are being accumulated by institutional investors, they can't buy all at once. They can't put billions of dollars in the market all at once. So they'll buy, allow the price to come back in or at least tighten, then buy again, usually along that 50-day moving average or the 200-day moving average. So we always want to short the weakest stocks in the market and buy the strongest stocks in the market, because that's when the probability is going to be on our side to be successful. Couple others. Tesla. This I thought could have been an undercut and rally. So, like, full disclosure, on yesterday I was thinking that the market was in big trouble, and that's kind of the frame that you need to be in. Very, very fluid with your stance on the market, because we're just coming off the lows. We're looking for evidence, but evidence in either direction. We shouldn't have a bias coming into the day. So yesterday, Tesla breaks under the $200 area, under 202, which was holding it as support. So I'm thinking, all right, if Tesla's breaking under support, don't want to own any tech. So I was focusing on more the oil and gas names and energy like CEG. But this broke under 200 and then had an undercut and rally. We closed still down 1.5%, but this was down like 8% yesterday. Closed up in the range, 85th percentile, and then today, nice move up 5.3%. So at this point, now I'm like, okay, this still could be an undercut and rally if buying support comes into the market right away on the open tomorrow. But if the market is going to roll over with Google and Microsoft down, then this $200 area, if this breaks again, it's not a single undercut and rally, then looking at a weekly chart on Tesla, there is not much support down to the 150 area. And if Tesla's going to be flushing down to 150, then we got to be just cautious overall in the market, especially in tech and especially in the previous market leaders, the FANG stocks, not the new market leaders. And then Bumble, just, I don't know, hit right on the 50-day moving average. Looking left, there's a supply zone. Seller stepped in right at $25 last area. And then market pressure is coming back. Similar idea to Snapchat, where we rallied, a lot of the junk growth stocks rallied off the lows right into a key resistance area. $25 is a nice round number. Unfortunately, we never got to that, but we'll see how this acts tomorrow as a potential short. So that is everything that I have to talk about. Let's go to the comments and get to what you want to see. What do you mean there are no setups? I got a list of 30 different high-quality setups. Hans, drop a tweet, or if you're on StockTwits, just tag me. On Twitter, I'm at Nick Drendel, and then on the other sites, I'm at Nick_Drendel. Tell me what setups that you see, all 30 of them. I would love to see them. I'm guessing a lot of them are in oil and gas, or drop them in the comments and just drop all 30. We won't go through all 30. I just want to see what you're looking at here, because I still don't see it just yet. Sold half of your Mara position and all of your HUT. Yeah, so I was really, no, not Biddy. I was pretty bearish on Bitcoin and crypto coming into the day. I thought it was just like too tight for too long. It had a bunch of shakeouts and shakeups. So coming into the day, I was like, all right, if things start to break down, I'm shorting Bitcoin by going long BITI. That was my pick on the Wolf Twitter space yesterday. And it was one of those positions where price action is so tight. We've seen consolidation in volatility. And after you get consolidation, you get expansion. So fortunately for the market, it expanded. Bitcoin expanded to the upside. Ethereum broke out, Ethereum Classic broke out, and BITI broke to the downside. But now with the tech stocks bringing this down, we'll see how everything works out. But crypto has been very tight for a long time, less volatility than even the indexes. So I think it was really good of you, who was that, Alex, to get on those stocks. MARA up 14% today. Up, 7% yesterday, I believe it was. 10% yesterday, 7% the day before. Awesome moves. Yeah, it's hard to buy so low, at least for my style, but I'm glad someone's making money on it. Watching China stocks, yeah. So Neo, Baba, they could be potential shorts too, but also like, I'm thinking everyone was also already kind of getting short these names. It was already extended the downside. Then we have that really strong reaction to Chinese stocks yesterday. Many were down like 15 to 20% at one point. A lot of them closed higher in the daily range. And now we're getting that reversal extension. And we'll see how this goes. It's a little bit different with Snap and the Chinese names because Snap just had like a weaker bounce. I don't know. Maybe both could work exactly the same, but I also I wouldn't want to go long any Chinese stocks at this point. It could bounce back, but I've said on the stream, and I'll say it again, I am horrendous at buying oversold positions. Like, if I had to pick a weakness, it's me trying to time a bottom, so I don't do that anymore. I let a bunch of other people make money, kind of buying the lows, and those people buying the lows create the bases that I typically buy the breakouts from. So I'm glad you guys are making money on those, but not me. CTVA. Yeti, this is an awesome stock, and I don't know why this is not on even my potential watch list. So I am writing that down. Breaking into all-time highs, maybe? At least highs for the year. All-time highs, IPO stock. Ooh, this is good. This is a beautiful, beautiful chart. Breaking out to all-time highs, market's just finding the lows. We'll see. If this can build under 65 as the market continues to sell off, something to watch. CTVA, good call. That was Yeti that put this out, right? Yeah. Yeti Shark, my man. All right, Hans. Yeah, so taking a look at Oxy, that was one of the stocks that I wanted to cover. I think you're right on the point with that one. A lot of oil and gas stocks are showing relative strength and are the ones that are holding up the best. So if all 30 of the stocks, your high quality setups are in oil and gas, then I could be convinced of that. But I don't know about the others. But CANO today. Think EVs in the U.S. is strong and slowly coming back. CANO. Long-term healthcare stock? Alex, what stock is Canoe? I'm not sure about that. Drop the ticker in the comments and we'll get to that one, Alex. CRDO, nice. Yeah, so I mean, I can't give buy or sell recommendations. This is not like financial advice, obviously. But this is one that I think someone brought this up to a live stream. Maybe it was you brought this up to the live stream as it took out $10, then it was reversing. As it was in this area, I said it was too strong to short, too weak to go long because it was under some key moving averages. We talked about the launchpad setup with the 8, the 21, the 50-day moving average, right at the same price and price popping over that. That's a nice launchpad setup, and this had a 55% move, 60% move, something like that in a shorter period of time. So we know the stock has power when it wants to go, when it can go. And you saw that today up 10.5%, closing nicely in the range. I want to see how this handles the 50-day moving average and this 1250 area on the pullback. It looks like we're already under that after hours, but after hours price on a thinly traded name is not as credible. So we'll see how this 1250 area holds. I have a hard time buying anything under the 50-day moving average, so I would have passed on the setup, but I mean, just keep a trailing stop loss so you have some profits. I mean, you don't want to give back all of your profits after a move like this, but a lot of power, and this has the ability to trend if the market is right. So like last time, the market had pullbacks, and that kind of created the launchpad setup. If it has another pullback like we do here, and we just pull back to the 8-day EMA, then I don't know. I have a tough time like playing this out in my head because I don't buy things under the 50-day. Not to say it doesn't work ever. Again, just a probability thing. But yeah, a lot of power today, a lot of volume, nice close, all good things. We'll see if it flags out or just we get big distribution. We come right back through $12. Good question. You bought early at 10.90. Yeah, I would just say just make sure you don't take a loss on the trade. What's my background and best year-to-date returns? So I work as an actuary, and I've been trading for 7 years now? I started trading in 2015 when Robinhood came out when I was in college. I was just a terrible trader for probably like 4 years, something like that. And then my buddy encouraged me to start posting on YouTube because he saw I had a passion for trading and personal finance. I was like, yeah, we'll do this. We'll keep this as a trading journal kind of thing. And since then, that was almost 3 years ago, I've just been posting and full transparency when I get things right, full transparency when I get things wrong. And this channel kind of serves as a trading journal of my learning process. So what I've learned along the ways is much more than I've made so far, but we're in a bear market right now. We're just trying to survive. At this point, through all my accounts, I'm up only 18% this year, which is great. It's up. It's not down a bunch, which a lot of newer traders like didn't study stage analysis, haven't learned from Weinstein or canceling kind of stuff, and probably chased the weaker stocks down. I've made a ton of mistakes this year as well. Like 18% should be much higher, but it's been a learning process, and it'll continue to be a learning process. So, yeah, background as an actuary, so I really prioritize risk management, and I don't know. I'm willing to put in the work because those actuarial exams are no joke. Let's take a look. Market rallied and CTKB did not move much. Is that a low risk entry point now? Yeah, so that's why I took off half the position today. If this is not moving when the market's railing 3%, it doesn't mean it can't work and can't continue to the upside. This pattern just might need another pullback to really tighten up and form a lower risk entry point. I don't think buying it over 1530 was, or as it broke 1530, was a bad idea. Sometimes we put on trades and the market gives us feedback saying, hey, the market's rallying and ripping. This stock is not. So more likely than not, I'll probably get stopped out on the other half of the position on this as it pulls back and tightens up. But I don't want to take a full stop on it. So we'll see how this holds up and go from there. GOEV. Oh, okay. Yeah, not a stock that I would be interested. Stocks under $5 also trade super weird. A lot of my trading style is based in like, what are institutional investors doing? Can I ride their trends on the way up? Can I short the stocks as they're liquidating positions on the way down? Because their liquidity really creates the technical analysis that I've studied. I haven't studied stocks under $5, how they've moved, how short squeezes go through. Like, I've looked at it, but I haven't spent hundreds and hundreds of hours studying that kind of stuff. So that's a part of the market where I go, people can make a lot of money. I'm not going to make a lot of money because I haven't studied it. Let's keep putting 100% into the one style that really fits my personality and my risk management, and just kind of improve there. Mark Minervini always says it's better to specialize than be a jack of all trades. And in the market where, like, when you play basketball, you play pickup basketball at the courts by your house. When you're trading in the market, you're trading against the LeBron Jameses, the Kawhi Leonards, the best players in the league. So if you're going to make money, you got to specialize in one thing. Like, I want to be a 3-and-D kind of player. I want to specialize in just shooting and a little bit of defense. And because my 5'9" frame never grew out to be an NBA player, I'll be a stock trader instead and try to focus on that. All right, please look at AMN, very strong. Nice base forming out of here. I just don't like to trade this group because it doesn't typically trend very well. I know CCRN is different, but that's a different characteristic. Like, this stock has different characteristics than AMN. And that's why in one of my tweets today, I said, look to the left of the chart, study the stock's characteristics. And by doing so, you'll understand how it moves more, and understanding how the price action and how it trends, all that good stuff. That's going to help you create a better expectation of your trade. So maybe you come into this thinking, if I can get 5%, then I'm taking that trade for a win, because I know this doesn't typically trend for a long period of time, nice and orderly, without a pullback that would tend to hit my stop loss. So just by knowing that and knowing this isn't a stock that's going to go up 50%, breakout, really give you like crazy asymmetrical risk reward, you got to either trade it much slower, which isn't my style, or just kind of hit it for a 3% gain and go from there. For me, this is a stock that I just don't trade because it moves slower. If these are the stocks that are really setting up in the market, I just know my style isn't in favor, and I go from there. But this could be inverse head and shoulder, left shoulder, big head, right shoulder, the low of the right shoulder, above the low of the left shoulder. Very important for an actual inverse head and shoulders pattern. And we'll see where it goes from here. I mean, weekly chart, relative strength new high, that's constructive. Can't go against that. Just not the quickest moving stock. And when the market does find its footing, I want to get in the more quicker moving stocks instead of being in a laggard at this point. MNTK, good one to bring up. Super weird action with this one. Only trades about 500,000 shares a day, and it's a $17 stock, so liquidity is lower on this one. I had this on the leadership list for a little bit as it was making new highs as the market was continuing to push lower. But I don't know if this had the secondary or I know AMPS had a secondary, but similar type action recently where we just split through all the moving averages. Looked like this was a bear flag, but then we break to the upside. Now we're back over all of them. Just seems like very erratic action. And you could have a low risk entry point, with a break over today's high, the stop at the 50-day moving average. I just don't love when we get quick breakdowns and then quick recovery, stuff like that. I would rather this play out and I miss the first move, let it make new highs, and then I'll go from there. HRMY, I have been looking at this one as well. Kind of goes back to the characteristics. This stock is all over the place. It's very choppy. It doesn't trend very cleanly for enough time to expect a good risk reward. So I use this as just more of a, how is biotech doing? Is this holding up? Versus actually trying to make money from the name. And that's fine. You're not going to trade every single stock. So why not trade the stocks that fit your trading style, like their characteristics fit your trading style. They're still showing relative strength new highs. They're in an uptrend already, showing accumulation from institutional investors. Now, you're not going to get a bunch of those stocks right now, right? Because we're in a bear market. That's just telling you it's not time to pound the table, make a bunch of money. It's not super easy trading still. Even though today and yesterday, Friday, kind of felt like easy trading, we're still in a bear market. And we just need to know that there's going to be times where we're 150% invested, making a killing for 2 weeks at a time. Just not right now. So we got to be patient. Nice stream. Thank you. Thanks for all the happy birthdays. Appreciate that. Let's keep going through these comments. Trend is your friend. Yes. Thoughts on DV? I hate how this gapped up. I was watching it and there's just never, I don't know. This is one of those stocks where I keep having this on a focus list and for some reason I can't buy it, or I don't buy it, and then it has a nice 15% move up, and that's plenty to take some profits on the way up. And then it comes back down to the 50-day, undercuts it, breaks out again, undercuts the 50-day. Probably should have been bought yesterday. Like Monday, we pull into the 50-day, get supported at that area, close right at the high of the day, right over the 8-day EMA, back above those key moving averages. 200 days, starting to curl up, doing all the good things. Just one of those stocks that I can't grasp for some reason. And everyone has those stocks that like you keep watching, but you never can like actually make money from them. This is one of those. So I'm glad it broke out today. Glad it was up 5.7%. Glad it held over 30. We'll see how 30 holds tomorrow. That's going to be a great tell for the stock and also for the market, the risk tolerance of institutional investors. But good volume the last 2 days. Even on Monday, like this flushed early in the morning on Monday, but then closed near the high. So a lot of this volume, heavier than average volume, came as the stock was moving up, which is a good sign. Going to a weekly chart, it's an IPO, so even though there is some supply to the left, there's just less volume and less supply because it only traded for a couple weeks at that area. So definitely one that I've been monitoring. Just, I don't know, can't take the trade on it. But any strategy for not getting half your daily gains wiped out by after hours trading? Yeah, you could day trade and sell everything into strength at the end of the day. But then if we did end up trending, if we did have good earnings from Google, then you'd be 100% in cash trying to buy back. That's just the market that we're in. And you need to understand, like, your expectations of making money shouldn't be the same every single time. You shouldn't be all macho, have a big ego, and say, every day I'm going to kill it in the market. No. There's going to be days the market's bad. There's going to be days that the market's great, but the stocks that you trade aren't breaking out. There's going to be days where your style doesn't fit the market environment. And your expectations on making money need to fit all of those. So my expectations is, hey, we're going in. There's still a bunch of big tech earnings. I'm going to sell some of my positions into strength, but I'm also going to keep a little bit in case we do trend. Now, half of those gains are wiped out after hours. That's the risk that we take to hold into a trending environment, which we're still in a choppy environment. So I probably should have sold more into strength than I did, but I don't know. We'll see how the first 30-minute goes. Let's see. Yeah, it isn't fun at all, but we'll go from there. Trader Line with a happy birthday. Thanks, guys. Appreciate it. Cool channel. Yeah, this is Chart Nerds channel for sure. CTVA did make a new highs today. Yeah, Yeti's always bringing the good charts to the channel, so I really appreciate that. CTVA. Okay, first time joining. Thanks for this and happy birthday. Can you look at Bro? Are you thinking Dutch Bros? Because I talked about that a lot, but Bro, B-R-O, I hate trading insurance companies or insurance brokers. They tend to move very slowly. This one is a quicker mover, but this type of action, breaking down 12% on above average volume, not something that I'd be interested in. We're under all the key moving averages as well. So maybe one that you short if we rally back up to like 60 is the market rally is huge, but I don't know. No trade from me on either end there. Dutch Bros continues to act pretty well off the lows, 27. This put in the low on that earnings where it was like 20.05, rallied up to 40, and then kind of a similar play to Snapchat in Teledoc. After that big rally, the market pressure came back in, and this went from 44 right back down to 30. So that's why, going back to Snapchat, what I'm thinking there. Yeah, so let's see, what do you say? Sting. Yeah, Alex is always bringing the good charts. Alex, I looked at TNK and actually put on a pilot today, and then of all the stocks, those shipping oil and gas stocks, this was the one that had just super volatile action, and I took it off for break even. But what was the one? ASC, this was up, 10.5% today, up after hours. Some of these shipping oil and gas names, like a combination, those are doing super well. So it makes sense that Alex is looking in that group as well. You're interested in dollar cost averaging and trade and investments. I don't like dollar cost averaging, but that's because I'm a swing trader. And one of my things is if you add to a losing position, you're just trying to fight the market. The market's always going to be right. And even if you make a couple bucks one time, 2 times, 10 times averaging down on a loser, it only takes averaging down and keep piling money into one trade that never comes back to blow out your account. And my number one risk, or my number one priority, is always risk management. So I don't want to blow out my account. I don't want to average down into positions. I want to, if something's working against me, I want to sell and get out even more instead of adding to a position that the market's telling me, Nick, you're wrong on this. PAYO, yeah, this is one. I talked about this on the Trader Line TikTok live stream that I did on Sunday because someone brought up, shoot, what was that one? It was another like payment app. 4. Someone brought up 4, and I was like, yeah, every time it pops the 200-day, it gets rejected. But the stronger in that group has been PAYO. Nice shakeout yesterday. Kind of a similar setup to DV, and then just pops over the high today, up 8.2%. This is another one I had on my focus list, but I didn't take the trade today. Full transparency, just whiffed on another one. That happens. All right. PWSC. Nice. A little bit thinner. Yeah, some of these consumer education stocks I have on my secondary watch list, but made pretty big moves today. So maybe this is a theme that we can watch. HLVX. Ooh, biotech IPO. Yeah, Trading IQ is another one where he drops charts and I always write them down because he catches the one I miss. Nice move today. We'll see how this handles 22% today. Trading IQ, this is why I love when you come to the chats. Yeah, Deere, uptrending, not at a low risk entry point. That was on Monday over this pivot. So overall, the key moving averages, nice and trending. And this is a stock, looking to the left, it tends to trend well. So knowing that it goes through these trends, that's your expectation for the trade. And you know when that trend breaks, that's when you want to get out instead of like rushing to sell into strength like something like HRMY that's super choppy and doesn't trend well. VRAY. I'm not a long-term investor, always learning. So like looking at 3-year charts, we can do it. but it doesn't give as much information for my style of trading and what I've studied. So I can say something, but you should take it with less credibility because I haven't studied those long-term trends as much. VRAY, a little bit thinner and under $5. I like that it's showing relative strength, good volume as it broke out yesterday. Just doesn't hit my trading criteria just because the low volume and under $5. Hopefully it goes over $5 and then sets up and I'll trade it from there. IMXI, no, super strong, whiffed on that one too. This is another one that kind of like popped the 50-day, then set up a pivot underneath it. But even that kind of reversed that one day. So I need to compile a bunch of those charts and go over it, both good and bad, and learn from that. So yeah, end phase and First Solar, we're going to be keeping an eye on this tomorrow because great earnings, even better than last time. Continue, like solar stocks, Energy Solar, #1 group out of the market. I don't know about that, but we'll see how this handles tomorrow's gap down. If the market gaps down and continues to press, we're in a supply zone up here. The 50-day moving average is at 280. It makes perfect sense for that to sell off, but we'll see. We'll see how that goes. All right, I am gonna get to a birthday dinner. Thank you guys so much for showing up. 15 viewers, this is awesome. Hope you guys have a great rest of your week. I will have, guaranteeing, a trading audit out on Thursday. And if you would like to be a part of the next trading audit, I've got a couple built up already. I've been super lazy posting them. But if you want to be a part of my trading audit where you send me about a month's worth of your trades, we walk through what you've done well, what you've done poorly, or what you can improve on, trying to be positive. Then you could do that by emailing me at stocktrickswithnick@gmail.com. That link is also in the description below. Big thanks to MarketSmith for sponsoring the live stream, keeping the channel going. If you guys enjoyed the trading platform and want to give it a try yourself, there's also a link down there. Have a great night.